Tesla's Q2 deliveries are gonna be, they're gonna be better than Q1's for sure, but it's still not gonna be up there where we all expect it to be, hitting records. Not yet. And in this video, I'm gonna be showing you guys, predicting what Q2 deliveries and maybe production would be, even though production is a little bit trickier. But for deliveries, we're mainly on point on this channel, which is pretty interesting. So without further ado, let's get down to it. Smash that like button, hit subscribe if you haven't already. Let's go. Yeah, so here's my production and delivery chart that I use every quarter, every month to figure out what's gonna happen in that particular quarter. In this case, it's Q2. So let's start off with Shanghai. And Shanghai, they can produce around 2,500 to 3,000 vehicles daily. But we are getting news that Shanghai is gonna slow down in their production. So we can't really expect as much as the explosive production that we've always been expecting with Shanghai at the moment. Things are mingling in competition, and there's fierce competition going on in China, even though Tesla is killing it there as well. They're doing pretty well as well. But we got the April numbers here, deliveries, it is the exact number of 62,167 in April. April wasn't that good for, Tesla in China. And it seems to be every April seems to be the case for Tesla in China. So that's pretty interesting. In May, however, I am expecting around 78,000 in production, which is exactly 2,500 vehicles being produced daily for the whole entire day of that month. Now, just to sidetrack here, I have here 62,000 vehicles in April. That's delivered already. This one is being produced. That's going to go in the Q2 column right here. In June, same thing, but there's 30 days. So we get, 75,000 in production. And overall, we have 152,500 in production for May and June, not for April. Because I haven't seen the production numbers for April yet. If there is, please comment down below. I'm trying to get this number, but I don't know, no idea where I can get it. It's not online or anything like that. So if you guys can let me know in the comments, that'll help me a lot. So that's Shanghai. Moving on to Fremont. Now Fremont, they were going slow in Q1 because of the hardware update for the SNX and for updating the Model 3 refresh. These two things were holding the factory back, and they're still holding them back. They are taking some time. So usually they do produce around 1,700 vehicles on a daily basis, but because of this, I brought it down to 1,200 for 29 days because there is like one holiday in April for Fremont, which comes around 35,000 vehicles being produced. In May, 30 days, about 1,250 vehicles being produced daily, 3,750. At 1,300, they are slowly ramping now. In June, 29 days, one day holiday, 37,700 vehicles being produced. Total, 110,000 vehicles being produced. So, they are ramping up slowly here and there. Berlin is a massive drama there with all the stuff that's going on. But they did announce that they can have a capacity to produce 6,000 Model 3 and Ys weekly, but they're not doing it at the moment. At the moment, because of all the shutdowns and all the erosions and so many hiccups here and there, it's not a smooth ride. I can see them doing around 4,500, 5,000 at most. So in April, 550 vehicles being produced daily for 29 days because they do have a holiday, just below 16,000 vehicles. In May, which is this month, they get 3 days holiday of 28 days, but production is increasing. So far, there hasn't been any delays, thankfully. It's about 600 vehicles being produced daily. That's 16,800. And when it comes to June, 650 vehicles times by 30. There is no holiday in June, so full days of working there. Just below 20,000 vehicles being produced there. Overall, we get just over 52,000 vehicles being produced in Berlin. They don't show any numbers what they do, but it looks like based on Q1, I would reckon that in Q2, they'll be producing more vehicles because there's a whole lot less distractions and a whole lot less drama going on, whether it's the Red Sea incident or the erosions or whatever there is, protesting, all that kind of stuff. So that's Berlin. Texas is very interesting because Texas, we finally get an update on the Cybertruck in Q1 earnings. It looks like they're producing 1,000 Cybertrucks weekly, which does come around to 140 vehicles or trucks being produced daily. Now I'm going to scale this back to maybe 100 to 100 really daily being produced, because they are pumping this thing out like babies. And I did increase the daily production of 3Y, of course, on the Cybertruck, because of the Cybertruck, to 725 vehicles being produced in Texas. So right now, Texas is producing more vehicles, which is including the Cybertruck, than Berlin. That's how I'm seeing it. 29 days, because there is 1 day holiday in April. That's over 21,000 vehicles being produced. In May, there's only 1 day holiday, and I put the same numbers of vehicles being produced, 725. That's 21,750. And the same thing with June, 725 vehicles being produced. Only 1 day holiday, we get 21,025 vehicles overall being produced. Overall production in Texas does beat Berlin to almost 64,000 vehicles being produced. Total production, including all this, excluding April of Shanghai, because we don't have that, which I do think it's maybe around 70. So maybe it would be around 460,000 vehicles being produced in Q2. But nonetheless, we get 378,000 vehicles being produced. Give that a 95% delivery rate. We get 359,000 vehicles being delivered at the delivery, of course, for April Shanghai. 421,790,000 vehicles being produced. That would give total of over 800,000 vehicles being delivered in 2024 so far. So 421,000, it is less than Q3's of 2023 of about 435,000, and it is a whole lot less than Q2's of 2020. Well, yeah, a whole lot less than Q2 of 2023's of 466,000. But we are improving from Q1. How would this affect the stock price? Smash that like button, because we're going to find out right now. So here's my Tesla stock price prediction chart. You guys know this very well how this goes. Before I put in the number here, the delivery numbers over here, I did increase the weekly gross profits to 16.2 because they are, benefiting from economy of scale. So we can't exclude that. We have energy ramping up to 1.9 billion in revenue and 437 million in profits. Now, this 437 million in profits for energy could be higher, maybe in the high 400s, because they are getting a very healthy margin on this. But keeping conservative of 23%, operating cost of 2.65 billion. Now, first I thought this was going to be a whole lot more, but then I forgot that, oh, wait a minute. Tesla laid off about 10-15% of employees, so that's going to bring the operating cost for Tesla, operating expenses, pretty low. I mean, not low, but it's going to help them a lot. I wouldn't be surprised if Q2 operating cost is actually lower than Q1's. But I'm going to keep it here. But I'm going to keep it at 2.65 billion just to stay conservative. We have taxes of 350 and other income of 350. As well, we have stock-based compensation of 500 million. First of all, let's see what the revenue and profits will be, because that's important. It was 421,790 vehicles. Yeah, bam, look at that. Look at all this number. I love it. And yes, it's available on Patreon as well, guys. If you guys want to, get access to all these charts, click the link over here. So, average selling price is 43,000. I'm going to keep it at that. Services and leasing, these guys are also growing as well, but take a look at this. We have total revenue of vehicles north of 18 billion, not thousand, 18 billion. And then we have total gross profits of over 4 billion. So that's really good as well. Total Q2 revenue over 23 billion, operating margin of 6.2%. Now, if we get this big jump, that's extremely bullish. That's really good. As well as the total GAAP gross margin as well. That's increasing. That shows the business and the margins are growing, which is, for the auto margins, which is pretty, which is awesome, which is really good, which is insane, right? I try to avoid that word, but it's insane, okay? The total net income gap is almost 1.5 billion, net income almost 2 billion. We get an EPS of GAAP of 41 cents, non-GAAP of 56 cents. The fiscal year, however, that's going down to $3.53. So we can see a higher PE to maintain this number of 177. 50 PE would be around there. That's the thing. That would be. However, if they do 6.2% in operating margin and the business is growing, I can see Wall Street and all these other, investors rewarding the stock, going, okay, you guys are growing now, margins are increasing, we got to price that in now. And potential of interest rate cuts could happen by the end of the year, we got to price that in. I can see this going high as 60, maybe 70, but I think 70 would be the stretch. I don't think we can see the 70 at this time. 65, 60, I think I can see this happening sometime between July 20th and October 20th. That would make sense. Now, moving on to Q3, as you guys can see, I did increase the vehicle gross profits here. For Q3, 16.8 and Q4 of 17.2. Average selling prices from 43,000 in Q4 to 43 and 250. And again, the reason why I'm increasing it is because Cybertruck is ramping and they're selling over 100K a piece. And now we're seeing price increases for Model 3. And we are seeing Model Y, the loan rate going down to 99%, 0.99%. So that's going to really increase the demand as well. And I do see the interest rate cuts, at least one happening by end of the year. So I can see them increasing prices on pretty much all their vehicles sometime in Q3 and Q4, helping the average selling price go up. You guys can see the services. I increased them here as well. For credits, I kept it the same year over year. Leasing, it's keeping it flat throughout the whole year, really, not really doing much because again, interest rates are still going to be high. Energy revenues are popping with their profits. Operating margin are obviously increasing as well, but not as aggressively because of the cuts. Of course, they're going to be hiring more people, but now they're going to be hiring more efficient roles and TM, not duplicate roles, which will help in the operating cost. Taxes are going up, and that's pretty much it, except for the shares outstanding, which does get diluted every single quarter, unfortunately. But nonetheless, for Q3, let me go ahead. I'm going to put here deliveries of 480,000 vehicles. Let's see what happens. I think this is a fair number. I think it is. And if we do that, bam, look at that. We get the total gross margins going up to 16.9%. Operating margin going as high as 7.2%, which is an absolute sheesh moment. We get the revenue of Q1 for that Q3, almost between 27 billion, net income gap of 1.8 billion, and non-gap of 2.3 billion. We get a EPS gap of 51 cents and a non-gap of 65 cents. The EPS seems to be maintaining well. If we give it a 60 PE, because we are seeing margins going up, we do see gap gross margins going up, things seems to be okay. And mainly because, I'm going to give it a higher PE here, mainly because the full self-driving in China and version 12.4, 0.5, 0.6, all these things are extremely bullish signs that are not taking into effect here. I wish Tesla can come up and add their software margins and profits and revenues, all that kind of stuff, which will really help out big time. But because of this, I can probably see the PE going as high as 70 here sometime between October 21st and January 20th, which will be around $245 per share or 810 billion. Now, for some reason, if there's a massive market crash and there's no cuts and there's more price cuts and it's just bad on bad on bad, maybe a 40 PE around there, 140, I can see it, maybe going as low as 30. But again, things are looking different when I'm looking in the next year or two for Tesla, especially when it's coming with all these FSDs and knowing that the fact that the market is forward looking. Giving it a 70 PE, I think would make sense. It sounds high. It does. But people are pricing in the full self-driving, which makes sense. Now, 65 would be around here. I would keep it at 70. 70. And yes, this does include an interest rate cut is going to happen, or has already happened. So that's included here. In Q4, I do expect a whopping 550,000 vehicles being delivered, which is going to be insane. And as you guys already know, Q4 is usually the strong quarter for all auto manufacturers when it comes to delivering their vehicles, selling their vehicles. 550,000 vehicles being delivered. Bam, look at that. 18.1% total gross margins. We have 8.3% operating margin, over $30 billion in Q4 revenue. We have almost between 2.4 billion in GAAP profits and 3 billion in non-GAAP. That would be an EPS of 67 cents, of GAAP and non-GAAP of 87 cents. But then the EPS in the fiscal year has gone down from 350 to 191, unless in Q4 Tesla pulls out another rabbit out of the hat, like as they did in Q4 of 2023 with the tax losses, which slapped on, I believe it was around $5-6 billion, which helped a lot. So if they can do that, they can probably maintain or even go above the $4 in EPS by end of this year. But if they don't, this is what we're going to get, $1.91. What's interesting here, guys, is that finally now, Tesla, they are now over $100 billion in revenue, which is insane. But the profits, however, is below $7 billion. So that, the bears will look at this and say this is terrible. However, though, the bulls will look at this and say, hey man, margins are going up, GAAP gross margins are going up, vehicle gross profits are going up, FSD is around the corner, things are happening. We already had the August 8th of robotaxi at that time, right? Things are looking good, right? And I can see if things are going well, we can probably give this an extremely high PE. Now, here's the thing. Again, the EPS fiscal has gone down from 350 to 191. In order to maintain this stock price, we must have a PE around 120, if I'm not mistaken, 130 PE. So imagine Tesla stock. The PE by 2024 Q4 is 130 PE. It's going to raise a lot of eyebrows. It really is. Unless Tesla, again, pulls something out of their hat with their tax things again. But seeing a high PE like this, it's kind of hard to see it to go even higher. Now, my price target for end of 2024 is still 350, which is about, what is that? 185 PE, 182 PE, with 183 PE, which is just absolutely nuts. And I'm giving that a less than 10% chance if that's the case. But I'm going to give it the same rate as Q3. It's just the PE is extremely too high. If you want me to be more, I guess, going with the flow here, then 150 around the 286s does make sense. 290 does make sense for Tesla. But I'm going to keep it the same as Q3 because the PE is just extremely high. It just really is. But this Q3, Q4, we don't care about that right now, and we don't really care about for this year or next year. We care about until the end of the decade, really. But main thing is Q2, and Q2 is looking to be, in terms of financials, it seems to be okay. It seems to be doing pretty well. In terms of deliveries, they're still recovering off that. It's a meh delivery for Q2, but nonetheless, delivering over 400,000 vehicles, electric vehicles, in this environment, I gotta give props. That is a sheesh moment. But there you guys have it. That is Q2. I mean, we're gonna update this next month when we get more information for May, especially when Shanghai comes out with their May report deliveries. We're definitely gonna check it out next month as well and update this to see what the numbers will be. But it's going to be very interesting to see what this Q2 deliveries is going to be. So I'm excited. I hope you guys are too. And lately, guys, there's been a lot of buzz about the superchargers for Tesla. I made a video about it, talking about the story of it and what's really going on, what to expect. But in terms of financials and how this could impact the stock price, EPS, and in the future, when we have majority of all vehicles being electric, they obviously have to charge somewhere. Tesla superchargers, of course. How would this impact Tesla's financials? And scale is the best thing that Tesla has for them when it comes to this. And scale is something that they're really good at. And I made a video about it over here, which is pretty darn interesting. So check it out. Y'all won't be disappointed. I'm probably shocked to see how this thing can actually scale and actually benefit Tesla in the long run, which is an absolute sheesh moment. Guys, get your I Bought the Dip t-shirt or your sheesh short, way of supporting me, or just become a channel member. $2 a month. Not a bad deal. Subscribe, and I shall see you guys in the next video. See ya.